Market volatility extended for a fourth straight trading session today, with the VIX closing above 22 and the S&P closing down 0.92% at 6672.41. We've talked about this support zone just above the 6650 level that goes back to mid-October. You can see this is our lower dealer cluster zone, and this is an area where dealers have flipped to buyers over the last several weeks, and we're right back in this zone after today's trading session. So it's going to be interesting to see whether bulls can hold this support level. When we look at the gamma exposure data, the largest GEX concentration is now at the 6700 strike, and we are below that level. We see negative gamma exposure dispersed all the way down to 6600. We're still seeing positive gamma exposure all the way up at the 7,000 strike, and that is our upper dealer cluster zone. Volume in the options market was also very widely dispersed, basically between 6,600 and 6,800, so a 200-point wide range for the majority of the options volume today, and that's a much wider range than typically what we've been seeing over the last several weeks. Switching over now to our daily candlestick chart and zooming in, you can see today's trading action right back into this 50-day moving average. We were also bouncing out of this zone during Friday's trading session. We want to see these levels hold both on an intraday standpoint as well as on the daily chart. 6,600 and 6,700 has been a major inflection zone going back to the middle of September.
Thanks, Anthony. Let's look at QQQ. Obviously very important to the broader market given QQQ's leadership. This is really the third time that we've come down to this 600 area, and Friday we hit 597. Today we hit 599. The more times we test this 600 strike on QQQ, the higher the odds we break through it. And we do have a total negative GEX picture right now. We do see the weekly candle opening up below the 9-period SMA and rejecting an attempt to go above it today. That is concerning. We can look at the last few times we were below the 9-period SMA. The last 2 weeks, we saw a dip below that was saved. If you go back to the August timeframe, we recaptured the 9-period SMA and moved higher. So really, we have to go all the way back to the February timeframe. You can see that first time we closed below the 9-period SMA on the weekly chart, and that was the beginning of this huge move down into April. So certainly a concern in my view. We want to keep this in mind as we go through the next few days.
All right, next let's take a look at Netflix. Netflix had a 10-for-1 split, now closing at 110.29, actually down on the day, down 0.83%. After this split adjusted price, let's take a look at the gamma exposure data. Now, this could change as the option contracts down at these levels are basically taking on new positions with market participants repositioning for the split. But if we take a look at the current setup, we see most of the gamma exposure is at the 100 strike. And if we look at the price action just over the last month or so, we can see after a brief consolidation period, Netflix actually falling below the 50-day EMA and has been trending below this level over the past month or so. We've seen this in a lot of mega cap tech names, especially with somewhat of a rolling over of the major moving averages, and we're seeing the same thing on Netflix. And so this combined with gamma exposure does look like the potential for further downside towards that 100 strike may be in the cards over the next couple of months. And we actually had an iron condor strategy on Netflix in both of our portfolios. We closed those out today, locking in $235 and $5,375 respectively in both of those portfolios, as we noted here in Discord earlier today. And basically our next steps is to sit back and reassess the gamma exposure data here in the coming next couple of days, while keeping a very close eye on the gamma exposure at this 100 strike. And we are trading below that 50-day EMA. One is pay special attention to the potential for further downside, especially if these recent lows are breached. By the way, you can track our trades in real time as we manage our options portfolio by becoming a member at geeksoffinance.com. You can also get a sneak peek of what we're trading right now by checking out our community Discord. I'll put links in the description below to both of those so you guys can check it out.
All right, let's look at IWM. We've been watching IWM closely for potential advanced clues that the market's at a point where it's ready to turn back up again. We've been watching the 230 to 235 zone based on volume and GEX that saw noteworthy changes in the last couple of weeks. And we've been inching ever closer to that 230 GEX area. And it also coincides with our lower dealer cluster zone and the lower Keltner channel. So lately, the last few days, we've seen volume between 225 and 227. Today's highest option volume was at 225, actually. If we lose 230, I would look toward that 220 to 225 area for IWM. And that would be an overshoot of the lower Keltner channel and potentially a reversal area. Price dropping in and of itself is not necessarily an indication of reversal. So we want to include other factors when we're looking at potential spots where we could reverse. And in this case, I wanted to bring attention to our GEX intensity gauge. So this compares IWM's current GEX, which is negative 2.146 billion, to other GEX readings over the last 52 weeks. And you can see we finally reached an extreme on the negative side. So this is something that I've been mentioning I was waiting to see. And with this large wall of GEX at 230, I'm inclined to be more interested in buying this dip with IWM as a contrarian move.
Next, let's take a look at Google. Google up today 3.13% on news that Warren Buffett was taking a stake in this name. Google closed at 285.05. If we look back over the last 6 months or so, Google has been one of the mega cap leaders. You can see, especially over the last couple of weeks, Google consolidating at all-time highs here. Gamma exposure concentrated at the 300 strike, as well as the 280 strike. We've been identifying these levels as a potential zone for price to continue consolidating and slightly grinding higher. You can see volume today all at higher strikes in the options market at 300 and even above. If we scroll up the options chain just a little bit, you can see gamma exposure now starting to grow at some of these higher strikes above 300 as well. And this move today was actually great for our iron condor position. We entered an iron condor on Google in both of our portfolios back on November 3rd. So we've been in this position now for a couple of weeks. Basically, we sold the November 21st Google Iron Condors for $2.19, targeting this 270 to 305 range. So obviously Friday's trading session saw us trading at the bottom end of that range. However, if we just take a look at the time, Google was trading not too far from where we're trading today, 283.36. So the goal of this Iron Condor was really to see price continue trading in this zone, right where this box is highlighting all the gamma exposure data currently sitting. Flipping back here to our existing chart, that's exactly what we've seen over the last several trading sessions. Price continuing to consolidate in this zone between the 280 and the 300 gamma exposure concentration levels. And it's always a great sign to continue seeing this options volume right in that zone as well. This has been our overall main thesis over the last couple of weeks. Iron Condor strategies targeting these large gamma exposure concentrations as price slightly grinds higher in some of these really high quality names that are currently still leading the market. And nice to see this confirmation today from.
All right, let's take a look at the VIX, which has monthly options expiring Wednesday morning pre-market. And if we look at our 3D graph, it shows us the largest individual GEX clusters that are expiring on various dates. And I wanted to bring attention to the GEX focus of 19 to 25 in mind as far as the strikes with the largest GEX clusters. Let's take a quick look at the chart. We see the whole moving average is still rising, and the VIX has been holding quite well above that line for the most part. And today did see a higher high compared to Friday. So we still have a rising trend with the VIX. What bulls would want to see is for the VIX to reverse in this general area, have that mark a short-term double top in the VIX and give the S&P fuel and room to move higher into year end.
And guys, you can track our trades in real time as we manage our options portfolio by becoming a member at geeksoffinance.com. Members also get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and strategies. It's a great resource. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.